that have been created in response to the recent release of the Remittances Community Task Force Blueprint for Action on response, recovery, and resilience, of addressing the impact that the COVID has had on remittances flows, and on ways and suggestions on how to mitigate some of the negative impacts. A set of measures are included in this blueprint for action, and I of course invite all of those of you that have not had the chance to see the document to download it at the eGFRID website. The measures that we are going to discuss over this period of eGFRIDs are aimed to address the issues in the short, medium, and to somewhat in the long term. And that's just been the reason now for this eGFRID sessions, multiple sessions that will be carried forward during the coming months to discuss specific issues through different lenses. One of the lenses, which we call track 1, is to remittance families, to see the issue through the lens of remittance families, both senders and recipients. Track 2 is for the service providers, namely the private sector, the difficulties they encounter, and actions that some have brought forward and could serve an example also for the rest of the industry. And finally, but not least, the third track, which is for a regulatory environment, which is the session that we're going to be hosting today, the first of several that we hope to happen on a monthly basis as we develop the agenda and the outcomes of each of these sessions advances. So for that purpose, we have a panel that will be introduced to you in a few minutes. As for me, I would really like is to introduce the moderator, and it's therefore my pleasure to introduce Arish Natarajan. He leads the global team working on payments and market infrastructure topics in the finance, competitiveness, and innovation global practices at the World Bank. His work spans from payments and market infrastructure, financial inclusion, digital ID, digital economy, and fintech. Arish, tell me if I missed something. But pretty consolidated. He represents, of course, the World Bank in several international working groups on these topics. He was the lead contributor to the preparation of the IMF World Bank Bali FinTech agenda, and he's the co-chair of a CPMI World Bank task force on payment aspects and financial inclusion. For us, specifically, more importantly, he was the World Bank representative in the group of the Remittances Community Task Force that deliver these measures to actions. So for me, that's it. Arish, I will give you the floor, give you the keys for the sessions today, and I will happily join you towards the end to have some common conclusions with you. So without further ado, you have the floor, Arish.
Thank you, Pedro, and thank you for the kind introduction, and I hope everybody is able to hear me well. So welcome to the discussions today, and thank you to the IFAD team for convening us today. So in the discussion today, we will talk a little bit on the regulatory aspects, and we have been at the World Bank. We have been monitoring some of the developments in remittances, and we are noticing some fundamental structural changes underway in the remittances market, and the importance of regulatory framework is becoming even more critical. And we will discuss some of these aspects in the discussion today. So we are organizing the discussion today into 3 themes. Firstly, to discuss what has been the experience so far and what steps have regulators and public authorities taken to address the immediate and short-term impact. The second theme would be on what interventions are needed to help the remittances market adapt to the new market context in terms of infrastructure, public policy, and then as well as also in terms of strategy to address that. The third one is there is some global initiatives which are underway now, notably the G20 cross-border payments roadmap, which was recently announced, and that is seeking to put in place and coordinate collective action at the global level and also at the country level. And we will discuss what this means in the context of the remittances markets. To discuss this, I have an excellent panel. Antonia says, Seo de Pereira, Thomas Lammer, and Thomas Leyland And let me introduce them one by one, starting with Antonia Esser. She's an engagement manager at Senfree, which is a financial sector development think tank focused on developing markets based in the beautiful city of Cape Town, South Africa. Antonia is a development economist by training and has been researching the barriers to remittances, particularly in Africa, for the last 5 years. She closely works with both private and public sector on reducing the cost of remittances and increasing the access to remittance channels, particularly to vulnerable population segments. Next, we have Ceuda Pereira. She's an economist and team leader for retail payments in the Director General of Financial Stability, Financial Services, and Capital Markets, or DG FISMA, as it is called, at the European Commission. She has many years' experience working on payments at the European Commission, the European Central Bank, the World Bank. She was a very dear colleague and was the financial attaché at the permanent representation of Portugal to the European Union during the Portuguese presidency of 2007. She has a master's on European integration from the College of Europe. Then we have Thomas Lambert. He is a member of the Committee of Payment and Market Infrastructures Secretariat at the Bank for International Settlements and focuses on cross-border payments and financial inclusion. And prior to that, he had stints in the Central Bank of Australia, European Central Bank, and also at the World Bank. And then we have Tom Nayland, who is, of course, a very critical standard-setting, represents a critical standard-setting body, which is important for the payments market, payments and remittances market. He leads policy development within the Financial Action Task Force Secretariat. He is responsible for setting and amending the FATF standards. His recent projects have included new global rules to regulate virtual assets and to combat the financing of weapons of mass destruction. Before joining FATF, Tom worked in the UK and Her Majesty's Treasury as the head of counterterrorism finance. So let me move to the first discussion topic, and I'll request the IFAR team to project the slides. I wanted to share one critical trend we have been noticing, which has been the significant shift towards digital, at least in terms of the channels and services which are available. Starting with the price data, the report on the Q4 2022-2020 report on the remittances prices came out yesterday, so I thought it'll be a good time to present. We noticed a significant drop in the fourth quarter from 6.75% in Q3 to 6.51 now in Q4 2020. The International Money Transfer Operator Index also fell significantly to 6.56 from 6.81 in the previous quarter. The global weighted average also saw a significant drop. And importantly, on the smart remitter index, which is the average of the lowest cost service providers who meet particular quality thresholds, that is down to 4% now. Moving to the next slide, and this symbolizes the key changes we are seeing. One thing which we noticed very in the immediate aftermath of the remittances of the COVID crisis on the remittances market was the difficulty and operational challenges many remittance providers faced in terms of keeping their channels open, in particular their cash-based channels, because of the operational lockdowns, disruptions in the cash distribution cycle, and in various other staff unavailability, etc. And we picked up on the sending side, we looked at the availability of service providers by the cash services, bank account-based remittance services, mobile money, and also debit and credit card. And as you can see, there was a significant drop we started seeing on the sending side on the availability of cash services, and that has continued. And in Q4, in fact, it dropped by 17%, and this is all cumulative drops. So this goes to show that there's been a significant constraint on the cash-based remittance services, and that this has also increased the cost of cash-based remittance services by 3%, again, cumulatively, and it was 3% from Q3 to Q4. And the bank account channel also, we saw some drops, and we saw increase in the mobile money and debit and credit card-based remittance services. And this is understandable given the shift towards digital. And then also that was accompanied by a significant drop on the remittances prices. Moving to the next slide, to look at the story from the receiving side, and we noticed a lag from the sending countries. And this is intuitively can be explained by that the advanced economies had the first wave of the COVID crisis and followed by many of the receiving countries. And here we see a similar trend, a decline in the cash services available, and corresponding changes also in the bank account-based services, and then also in mobile money. And within bank account, there are, of course, same bank services versus kind of services which are intermediated by some service provider. The same bank services were disrupted less compared to the white label services used by bank providers. And this is important because on the one hand, we are seeing a drop in the remittances prices. And the other hand, we are seeing a change in the composition of the service providers in the market in terms of the channels, at least. And it's not very clear whether all the people who would have used the cash channels have migrated to the digital, or there are people who are being impacted because of the disruption to the cash-based remittance services. So in the sense, it is both good and potentially also bad. And we have to really see how do we respond to this, and we need to do a little more research. So let me now move to the panelists, starting with the first topic on what's been the experience so far. So let me start with Thomas Lammer and request him to share some perspectives that he has been observing, and he and colleagues have been observing at the CPMI on the payments, correspondent banking, and other such trends. Thomas, over to you.
Thank you very much, Harish. What you laid out for remittances is very much in line with the trend we observe in the overall payment space due to the pandemic, first based on anecdotal evidence, on the other hand, also first figures that are coming in based on 2020 data. So in our view, the pandemic has highlighted both the progress and the shortcoming in payments, and has led to fundamental changes in retail payments by accelerating the shift we have already observed before, the shift towards digital. We think that there are at least 4 reasons for this. First, of course, we have the public concerns when it comes to the wire transmission from cash that has risen, although scientific evidence suggests that the risk is low compared to other objects, but still there is this perception in the public, which of course has given a lot of progress and a lot of on the contactless payment side, a lot of boost. So secondly, we also see that past experience and uncertainty in the economy, for example, the great financial crisis has led to precautionary holdings of cash. So although this cash is not used for day-to-day transaction, people are holding a higher amount of cash than they would do during regular times. Due to the closure of physical stores in lockdown situation, of course, the e-commerce activity has surged, and as a result, also digital payments. And we also have seen that cross-border payment transactions have seen a fundamental transformation. You already highlighted, and the World Bank has already indicated some figures on remittances, but the picture is not entirely clear. Some channels and some corridors have increased, others have declined, but we can see an increase in digital channels to that extent. Of course, if we talk about cross-border payments, in-person cross-border payments, due to the reduced mobility, the payment card transactions, for example, have of course fallen. We also see that, of course, other large volume use cases next to remittances, such as government payments, have increased due to the pandemic. Almost every country worldwide has introduced some kind of social spending measure in response to the pandemic. And this is often in form of one-off or recurrent social transfers or adaptations to existing programs. And based on our experience, based on the feedback we have received from the CPMI jurisdictions, about 3/4 of them rely at least partially on credit transfers. So from that point of view, this of course offers an opportunity to be a hook for increased financial inclusion. But on the other hand, also has the challenge that those that are currently not have access to transaction accounts might be left aside. So overall, I think it's fair to say that the pandemic, of course, drives the greater use of digital payments. This, in some cases, might even be undermining the acceptance and availability of cash. And while we all share the ambition to make payments more efficient, in other terms, often this means making them digital. We must not leave the more vulnerable segments of the population behind. So some central banks have warned that the refusal by merchants to accept cash could place an undue burden on those with limited payment options. And of course, by extension, that might also hold true for remittances, since we know that still a lot of them are initiated via cash-in, cash-out transaction. Of course, going forward, central banks will need to navigate multiple policy trade-offs. In particular, a topic which is currently hotly debated is always, of course, retail central bank digital currencies. The potential it has for financial inclusion, but also for cross-border payments. And also progress and digital identification can, of course, help to increase financial inclusion. Finally, as part of my first intervention, let me say a few words on a topic that is particularly challenging for cross-border payments, is the decline in correspondent banking relationships. We, on the CPMI side, have been tracking this data over the past years, and based on the pre-COVID data from 2019, the number of active correspondents continues to decline, and we have seen a drop over the past decade by 22% of active correspondents since 2011. And since 2018, the drop was 3%. So over the last 8 years, this rate of decline has, of course, varied across jurisdictions, but it is more pronounced in emerging market economies and also small islands, developing states, and dependent territories. So those that are typically most reliant on remittances. Of course, unfortunately, the data for 2020 is not entirely available yet, but based on early indications, it suggests that the COVID-19 crisis is very likely to accelerate the changes in the correspondent banking landscape. For us, it's therefore important to act now, and we'll possibly have at the data point during discussion a bit more time to touch upon the cross-border payments agenda we have on our plate, and the roadmap to enhance cross-border payments, which will also hopefully address some of these topics we are seeing in the decline of correspondent banking relationship. I'll stop short here, Harsh, and hand over back to you.
Thank you. Let me now move to Thomas Neyland from FATF. Thomas, there were a few announcements which were made by FATF in the immediate aftermath of the crisis, which was very well received in the industry. So if you can talk a little bit about that, and then also your plans and what you see is the experience. And to the participants, please feel free to use the Q&A tool to pose any questions, and I will try to weave them into the panel discussion or bring them up during the Q&A section. Thomas, over to you. Thomas Neyland, over to you.
Thank you. Yeah, we very much share your analysis from the World Bank and the CPMI. We've been much more focused during the pandemic on helping national authorities adapt to the circumstances which have changed very quickly, and also to accelerate the ongoing longer-term changes in payments, which are in many ways making this situation easier, but we need to bring things forward and adopt them faster. So the FATF was deliberately very quick to respond to the crisis. We focused on emphasizing how important it is to keep critical financial infrastructure and services running, and also to be vigilant to how the financial crime risks are changing. And we did that through a public statement in April, a much more detailed piece of guidance in May, and then most recently an update last month on the COVID-related risks. And all of these have focused on the pandemic and its runoff effects. They disproportionately impact on the poor and disadvantaged, and it's important now more than ever to ensure that everyone has access, for example, to stimulus payments, furlough payments, and can maintain support for relatives in other countries. There's a perception that anti-money laundering measures get in the way. They're not intended to. And in fact, they should be helping to make sure that payments are safely getting to their intended recipients. And the centerpiece of our approach has been the risk-based approach. It runs through the FATF standards, and it's a tool for authorities, financial institutions, and remitters to use to tailor the measures that they apply, the safeguards that are used to the level of risk. Where there are lower risks, you can have lighter controls. Where the risks are higher, you need to do more. In the context of COVID-19, we've encouraged the use of simplified measures, particularly for low-risk transactions like government benefits, and for regular remittance payments, which are in line with normal patterns. That doesn't mean we can forget about financial crime. Keep in mind that in some areas we've actually seen increased risks during this period, particularly fraud and cybercrime, but the nature of those risks has changed, and we've called on the private sector to address those specific COVID-related risks by remaining vigilant about those, even while they relax controls in other areas. The other important aspect of this is calling on national regulators and supervisors to provide ongoing outreach and guidance. One of the big obstacles is if there is a gap in understanding regulatory expectations, people can over-comply and do more than is necessary, and that can create an obstacle to getting payments through. So what we have emphasized quite strongly is strong guidance and dialogue to ensure that the risks can be identified and addressed without people being excessively heavy-handed. The other thing that we've been working on in parallel is digital identity. It's a long-term project. We started in early 2018, and it was quite fortunate timing that we were ready to publish our guidance in March last year. We're lucky that we finished just as it was most needed. And we've had an enormous amount of interest since then, particularly in the context of COVID-19, where confinement and social distancing measures mean digital ID is taking over and face-to-face business is becoming difficult and dangerous. It's difficult to put in place a national digital ID system at short notice during confinement, but we've seen much greater interest and adoption in performing aspects of due diligence remotely, particularly video identification. And that's consistent with the figures that you just presented on non-face-to-face business taking an increased role. But this is something which is a long-term trend, and we're going to need to keep pushing it and keep monitoring it. I think it's something where the pandemic has accelerated a change that was happening already, and that's probably for the better.
Thank you. Thomas. I'm sure we'll be able to get a little bit more into the details as we progress in the discussions. Let me move to Antonia Esser now to hear from her any insights from her country experience. Antonia, over to you.
Thank you so much, Harish. Thank you so much, FFR and IFAD, for putting these series together and really talking about implementation of the blueprint for actions and the various roadmaps and plans that are out there, including the blueprint for action we have been working on in the working group. Thank you for including me in the panel, and thank you for the question. So at Cenfree, we have, with support from FSD Africa, been following developments in the remittances regulatory space, especially in the developing world, and particularly focused on Africa, and are supporting several African governments and regulators and policymakers in their response to the crisis. And if I could summarize what the regulatory trends or what the measures we have seen that have emerged over the past year in relation to domestic and cross-border remittances, it's really in the first trend. I mean, they're not really, they don't follow each other, they happen in parallel, but the first trend we saw move from governments to declare remittances services in many countries as essential services during lockdowns when they first happened, ensuring that people can send funds and can receive funds. Not every country did this, so there was some need for some countries to make moves. But the discouraging the use of cash, as we already heard, as a potential transmitter of COVID was really prominent basically all across the developing world. In the second trend, there was more active encouragement of the public by governments and regulators to switch to digital financial services and really take advantage of the natural increased uptake of digital services due to the aversion against cash and also due to lockdowns. We saw really a new environment that resulted in the need to switch to alternative channels and open digital options to both new and existing customers. And important channels were disrupted. And Thomas already mentioned that the access to cash, the kind of rebalancing of agents, especially mobile money and other digital agents, that was really a big kind of setback for operators, or a big challenge to overcome. And there is still, to this day, the very big risk that especially remittance recipients, who are often vulnerable, would be kind of left outside this space. Nevertheless, public and private sector players did very well and rapidly started collaborating on waiving fees, especially mobile money fees and other digital kind of transaction fees, waiving interbank fees, increasing wallet balances and transaction limits. And as a result, we witnessed an impressive growth of digital remittance services, and in particular mobile money, as Harish already showed in the data. Border closures also forced kind of some of the informal flows that typically happen kind of informally across borders to shift into formal channels. And we're yet to see whether that is a kind of a lasting impact or whether they will move back now that some borders are reopening. And in Rwanda, where we're working with the central bank, for example, we saw an unprecedented increase in mobile money P2P payments, which was coincided with lockdown, but in particular with the policy on waiving fees. Immediately the next day, basically, it shot up by really growth levels we have not seen before. And what was particularly interesting there, this was particularly prevalent amongst new users and amongst women. So it shows the power of these kinds of policies. And during that second trend, we also saw regulators and supervisors in the payments and cross-border space coming to terms with working from home themselves, setting up remote teams, established secure connections. A lot of them stopped on-site inspections and allowed for increased remote reporting and product applications. This is a massive undertaking, especially for those countries who typically rely on paper-based systems and very manual processes, who don't have secure internet connections. And it also opened this kind of shift, opened, of course, the gates for consumer protection abuse and increased AML/CFT risks. So not all positive, but definitely a very worthwhile trend to discuss. And the last trend I just want to mention is the specific guidance that Tom already mentioned. More governments and regulators increasingly issued specific guidance to the market around digital financial services that also impact remittances. So allowing for remote onboarding, issuing guidance to industry around eKYC and remote account opening, to really remove the obvious obstacles for industry and further deepening the digital trend and enabling also the protection of remittances agents and consumers in the face of the virus. As Thomas Lam already said, we witnessed increased interest by central banks in national and regional digital identity schemes. Central bank digital currencies, particularly retail ones, shot up. And central banks in sub-Saharan Africa, where we work, increasingly also focus on remittances as the road to recovery of their economies. So it really brought to the forefront cross-border payments issues around regulatory frameworks that have existed for many years. But what this crisis has done is really accelerated and really pushed regulators and supervisors to act and to having to act fast. So most of these issues aren't new, and we can really leverage this momentum. But of course, the crisis is far from over, and we expect to see and definitely need more support, especially in those countries that really rely on remittances as a lifeline to their economies. Let me stop there.
Thank you. Thank you, Antonia. That was very interesting to hear, and it resonates also with our experience across different countries. Let me now pass it to Seo, and Seo, do you want to add anything from your vantage point?
Yeah, thank you, Harish, and good afternoon to all. Perhaps I could add some general points on actually the work that we've been doing at the European Commission for more than 10 years now, which has led to a more competitive, innovative and transparent remittance market, and which has perhaps also helped in this difficult situation with COVID, whereby it was there is a plethora of options in terms of digital remittances. This evolution, the shaping of the market through legislation has helped promote this diversity of solutions in the market, and perhaps also consumers getting used to sending remittances digitally. Of course, the bulk of the market remains generally cash to cash, but nevertheless, as I mentioned, so through the first payment services directive, which actually opened the market to non-banks, the second one, which improved transparency for transactions from the EU to other jurisdictions, and also encouraged innovation with open banking. So the legislation has indeed shaped the market and contributed to higher levels of digitalization. And in terms of transparency, there was also an evolution from PSD2 to the latest cross-border payments regulation in terms of making currency conversion charges more transparent, at least within the EU, and for electronic payments. This is still being implemented, so we are observing the market very carefully, and we will take the opportunity when we review PSD2, which will happen at the end of this year when we will launch the review. We will pay special attention to transparency issues, in particular for cross-border payments, and we will see if indeed there is scope to further improve transparency through this agenda. And in general, the European Commission has called to member states to ensure business continuity of remittance service providers in the EU, and also for member states to consider financial support to the remittance sector as well in the framework of their, let's say, initiatives to support the economy. So perhaps these are some initial thoughts on these topics, and I will develop more perhaps in the next round of questions. Thank you.
Thank you. Let's stay with you, and it's a good segue to the second topic. The European Commission, and I think particularly your DG, had recently released the retail payment strategy and then also digital financial services strategy. And what is it? Can you describe that very quickly, and then also talk about what does it mean for the remittances market?
Right. So indeed, first of all, the retail payment strategy and digital finance strategies are part of the digital finance package, which also includes two proposals for regulating markets in crypto assets and cyber resiliency. So what's the purpose? It's indeed to support the process of digitalization in the economy overall, and in particular in the financial sector. And through this package, it was also recognized that the payment sector is at the lead in terms of innovation, and it's also its strategic importance was also recognized. And I must say also for the first time in the retail, in a commission, let's say, comprehensive strategy, we have cross-border payments featuring importantly. So in terms of cross-border payments in general and remittances, what do we have there? First of all, on transparency, I've already described the rationale to see when we revise PSD2 and also in the future the cross-border payments regulation, what is the scope to further improve transparency, in particular with regard to currency conversion costs. As at present, the cross-border payments regulation only applies to the so-called electronic credit transfers, which means that, for instance, cash-to-cash transactions are not included, and also transactions between the EU and third countries are not included. So clearly, there is scope for further improvement. We also consider that there is scope for further improvement in terms of the execution time. So the time that, as you know, it takes for money to be delivered to the recipient. And currently in PSD2, we do have obligations of transparency and also in terms of the maximum execution time, but for payments within the EU. But beyond the EU, these are not included. So there's possibility taking into account developments such as SWIFT GPI initiative, which overall improve the predictability of execution times, and also more in general, the G20 roadmap on cross-border payments. There is margin to perhaps revisit this issue of the maximum execution time and the predictability of the execution time for remittances between the EU and other jurisdictions. The cross-border payments agenda also recognizes the importance of and the potential of projects of interlinking payment systems in the EU and in third countries, and also the direct access of remittance service providers to payment systems, and removing any legal barriers to that. Furthermore, and this is another topic that is also included in the G20 roadmap on cross-border payments, we also call for a wider implementation of global messaging standards, such as the famous ISO 20022. I think Thomas will probably say a few things about that later. And on remittances, we also support specific actions, in particular through our development policy arm, so to say, and supporting SEPA-like initiatives in developing countries, and also the increasing the access to payment accounts, as this clearly facilitates the digitalization process. Now, maybe just saying also a few words about the digital finance strategy, and in particular the legislative proposal on crypto assets. So
on that, there is a question which was there in the panel, specifically in the Q&A panel, specifically asking about CBDCs and stable coins, and what is the what is the forecast, what is the general direction in which it is going. So as part of your response, or as part of your coverage on that, if you could also address this question. Thank you.
Sure. So indeed, the proposal for a regulation on markets in crypto assets includes the regulation of the so-called stable coins. In the legislative proposal, they are given two names, which are e-money tokens and asset reference tokens, but I don't want to enter into the technicalities here. But in a nutshell, what the regulation does is to have a licensing regime for the so-called stable coins. And this proposal is currently being negotiated at the level of the Council and the Parliament. So we can expect hopefully some progress during this year, and perhaps then we will have a legal framework in place for stable coins next year. Regarding CBDC, this is also part of our retail payments and digital finance strategy. So there is general support to the idea of studying the potential of these, as we believe that there are tangible benefits. We also need, of course, to be very cautious and to consider the risks, in particular, of disintermediation or crowding out of private sector solutions. So obviously we don't want that. And so we are let's say, starting a dialogue with the ECB on these matters to make sure that all the risks are addressed, and also to consider the various design options, taking into account the broad policy objectives in Commission policies, which are not only limited to payments or digital finance, but also privacy, data protection, macroeconomic policy, etc. So this is a process that is just starting, and in general, we are very supportive of studying the issues that arise with the issuance of a central bank digital currency, and in particular the euro.
Thank you, Sil. We'll build on this in the next segment. Moving to Tom Nayland. Tom, you talked a little bit on the digital ID report which came out in March, and then you talked about subsequent announcements. If you can contextualize that to the specific case of remittances. And there was also a question in the Q&A panel specifically asking about what can country authorities do to take care of informal workers, workers in the informal segment, informal sector, the migrant workers who do not have documentation. What can be done? And there's a nuance in the question about what can countries do to regularize them, etc., which I think goes beyond the financial sector domain. So we can't answer that in this forum. But maybe you can talk from the financial sector perspective. What is it that can be done as part of your response? Thank you.
Thank you. Indeed, it goes a little beyond what we can deliver, but there's a lot that we can deliver to make it easier for people who don't have documentation to access financial services even before it's provided. And that's been a big focus. We did guidance a few years ago on financial inclusion, and then a supplement, I think about 18 months ago, on customer due diligence. And that's built on in our digital identity guidance. The theme that runs through it is that things like tiered customer due diligence or limited function accounts are an appropriate way of giving people access to basic services, even if they lack identity documentation, on the basis that there are other ways of managing those risks. You may not be able to use certain functions which are high risk, or it may be that you can build up a track record or a profile of how you use your account based on an identity document issued by the remittance service provider. And that track record of activity is the basis on which the risk that you represent is understood, and on which they can have confidence to continue doing business with you. We've been focused on encouraging and enabling supervisors to allow that sort of approach and the industry to adopt that sort of approach. One of the challenges is that countries are quite slow to do it. People are afraid of failure. They're afraid of letting criminal activity through. So they're reluctant, and we're still looking at ways to increase the confidence that people can have in following that sort of approach. The COVID situation is maybe changing that by putting more emphasis on digital ID, but also putting more emphasis on technologies that can enable financial inclusion even further. Things like collaborative customer due diligence, things like enhanced screening and monitoring tools can give more confidence that the risks are being managed in a way that doesn't rely on upfront identity documentation. Now, that's obviously slow to get moving, but we're hoping that the long-term trend is increased use of those tools is going to enable undocumented people to have greater access. Coming back to what's going on in the short-term response, it's been a lot of the response we've been advocating has been to pivot towards those new technologies, and much like it's been seen in your data. But we've also been very focused on informing people about how the risks are changing. So the report that we published in December set out a whole host of case studies, overpricing of medical goods, frauds in supplying personal protective equipment, online fraud in general, but particularly abuse of stimulus payments and fraudulent emergency loan applications from businesses. And it's by addressing the new risks adequately that we can maintain confidence and maintain a sort of adequate normal level of vigilance in other areas. The other thing I wanted to focus on right now is we have long-standing problems in the remittances sector as well as the short-term ones, and we can't forget about those. In the FATF, we've been worrying and looking at the phenomenon of de-risking for the past 7 years now. We've published, I think, at least 2 pieces of guidance aimed at addressing this. We've had a G20 remittances task force. We've had the ongoing work of the Correspondent Banking Coordination Group that brings together all of the organizations trying to combat this problem. And we haven't finished the work that we're doing to try and address those underlying issues where a lack of confidence in supervision of the sector, among other things, as well as commercial factors, is making it increasingly difficult for remitters to maintain access to financial services through banks, which they rely on as the infrastructure for their clearing and settlements. And I'm sure Thomas will have more to say about this later, but I don't want us to lose focus on those long-term problems, even while our activity has to pause because of a current, more urgent crisis.
Thank you, Tom. There was a question in the panel about what do you think countries can do more to implement the eKYC in a rapid fashion, and more jurisdictions adopt eKYC?
I think one of the big factors is simply understanding it. Supervisors globally, in fact, have been somewhat on the back foot with the pace of technological change. There are some countries in which supervisors try to get out ahead of this. They hold tech sprints, they hire people who understand new technological mechanisms, new delivery mechanisms, and they educate themselves. But those supervisors are in a minority, and in a lot of countries, there's a combination of the lack of tools and deep expertise that they need to assure themselves about how these technologies are being used, but also an unwillingness to let the private sector go ahead and introduce them until the supervisors are confident and comfortable. So bridging that gap is a big priority, but again, it's not something that can be done in months. It's going to take years.
Thank you. Let me now move to Thomas Lammer. Thomas, you were involved in the PAFI work very actively, and there was a recent report which incidentally also came out. at the peak of the COVID crisis, which refers to the fintech opportunities for advancing financial inclusion. Any particular highlights from that which are relevant for the remittances market?
Thank you very much, Harish. Yes, and indeed, I mean, all the entire discussion we had until now is it boils down that we need to increase financial inclusion in view of the ongoing pandemic and also the shift towards digital payments to really ensure that the people are not left behind. And financial inclusion, in our point of view, and I think I'm speaking also on behalf of the World Bank in this regard, starts with payments. It's a kind of gateway to broader financial services. And at the core of payments or retail payments is a transaction account that can be universally used for a variety of payment needs. So this was the premise we had 5 years back when we issued the first BaFi aspects of financial inclusion, payment aspects of financial inclusion, or BaFi guidance. But of course, time has changed since then. So even well before the pandemic, we have seen a major uptake of technological innovations in financial services. So we decided, the World Bank, together with the CPMI, decided to have another look at the guidance we have issued back then in 2016 and see whether there's anything we have to kind of correct or sharpen in view of the fintech developments we've seen over the past few years, or whether there's anything we can kind of additionally give as guidance or considerations for the authorities that are looking into this topic. So having said this, we started the work, it was late 2018, and kind of looked into this topic. And indeed, we issued the report, Payment Aspects of Financial Inclusion in the FinTech Era, in April 2020. So just when most of our countries have been hit by the pandemic. When doing so, we were looking into a lot of the topics we have been mentioning over the past hour or so when we discussed the aspect of the elements of remittances and how they are affected by the pandemic and or can be improved by financial innovation as such. So we have been looking at central bank digital currencies as new products, stable coins, also one of the questions that was just raised, and probably something that is closer or more down to earth and already a reality in a lot of countries are instant payments. And these are the new products we've been looking at or analyzing when we looked at the guidance or how it can be refined. And the other elements are the access modes, like, for example, open banking, electronic wallets, and super apps to that extent. And all of this is based on a set of technological innovations we looked at, like, for example, digital IDs, of course, very relevant for eKYC, contactless technologies, biometrics, APIs, so application programming interfaces, and distributed ledger technologies. So there we kind of, after thorough review, we came to the conclusion that in fact the original guidance we've given, the guiding principles of 2016 are still valid. However, we see that, or we concluded that fintech presents both opportunities and challenges in improving access to and usage to safe transaction accounts. And we talk about usage, we also refer to one of the large volume use cases, like, for example, international remittances. The fintech as such can be leveraged to improve the design of these transaction accounts and payment products and make them better accessible, enhance also the user experience and awareness, and achieve efficiency gains, both on domestic as well as cross-border level. At the same time, these benefits come with certain risk, obviously, in terms of operational and cyber resilience, the protection of customer funds, data protection and privacy, and also digital exclusion and the market concentration. So all elements that are also to some extent touched upon in the blueprint we are referring to in this discussion. How should we approach this challenge? First of all, fintech developments call for increased international and cross-sectoral coordination, especially in the light of their often global approach and cross-currency nature, just referring to global stablecoin proposals that are out there. Second, continued efforts of authorities to keep pace with innovation will help to avoid gaps in the regulatory, supervisory, and oversight framework. So much to the point Tom just mentioned, authorities need to keep pace with the developments. And to some extent also, of course, in a measured way, but also get a bit out of their comfort zone and try to leverage new developments. And finally, also fintech developments have highlighted the opportunities and challenging of broadening payment service providers' access to the payment infrastructures. And this is a point which also nicely links to the blueprint as such, and also the roadmap of the G20 on cross-border payments. Thank you.
Thank you, Thomas. And we'll build on this in the last segment. So, Antonia, if you can talk a little bit about your perspectives on what's been the experience of a few countries you've been monitoring on eKYC, enabling mobile money providers to receive international remittances, etc. That'll be great. Over to you.
Yeah, sure. So I think, again, just to re-emphasize, the power of mobile money can't be denied in the context of this crisis. When we looked at the prices or the costs, when we looked at the uptake, so allowing non-bank entities such as MMOs, mobile money operators, to receive and send remittances has been proven to decrease the cost, increase customer choice, and also increase the access to remittances. This, of course, is kind of coupled to the extent that the agent networks operate, how deeply they penetrate, and how much access to cash they have, meaning that even mobile money transactions more often than not terminate as a cash out. And that is also how a lot of the agents' business models are centered around cash in and cash out, which in itself is kind of a contradiction if we want to look towards full digitization of end-to-end remittances. But be that as it may, mobile money schemes have aided the uptake of digital remittances by the waived fees and revised transaction costs. As mentioned in Rwanda, after this phenomenal increase in mobile money adoption, through the temporary relief or drop of transaction fees, as soon as the fees were reintroduced, the mobile money transaction levels dropped again, which is a very, it's understandable, but at the same time, it kind of highlights this important crossroad that we're finding ourselves in. We are getting requests from regulators as well as public sector as well, including the Central Bank of Rwanda, the regulators are increasingly asking the question, how can policymakers and supervisors, and including the regulators themselves, make this transition from the temporary relief measures they introduced, which undoubtedly set something in motion that they hadn't even dreamed of. How do you make that transition into a more sustainable road to recovery? While also accounting or mitigating the new risks that arise, cybercrime, data protection issues, we already heard it before. So the balancing act of protecting this financial stability in an increasing digital world while encouraging market development as a regulator was hard enough before the crisis. And the new complexities really definitely ask for assistance in that space. From the regulatory side, we did hear that many of them are a bit taken aback by the technological advancements and really require assistance and rapid cross-country learning and exchange. So there is also quick adjustment of policies in some of those areas. So what we have seen in some countries, which has worked really well, is the frequent exchange with industry, just keeping up to date what is happening on the industry side, but very much also, and I think this was raised in the chat, releasing up-to-date information, especially on new risks emerging, and Tom also mentioned this. It's absolutely crucial for industry to understand what is happening from a regulatory perspective and what the regulator would like to see. So this two-way kind of exchange of information has proven to work in some instances, but we really would like to see that more across the board. And the interconnectedness or the very close relation between digital uptake and enabling digital identity has already been highlighted. And central banks are increasingly aware and interested in the field. I mean, in sub-Saharan Africa alone, 35% of women and 26% of men lack formal identity, and we don't want to force them into the informal system. This is a chance to bring them in, but we don't want closed loop systems only focused on the financial use case. We really need to make sustainable fit for purpose, create sustainable fit for purpose schemes, you know, especially for smaller, less populous countries with lower levels of financial inclusion and low rates of digitization. Because we don't want this digital divide to increase and only some people have access to central bank digital currencies, specifically those that can digitize and that can access those digital channels. Nevertheless, the focus on identity is a very good one. And of course, related to it are KYC and onboarding policies that we have seen implemented. And I just want to mention a couple of examples. So in India, for example, the securities regulator endorsed the use of video-based ID verification and electronic signatures. What comes up a lot is also Ghana. So KYC information is now transferable from the SIM registration process to allow for remote mobile money account opening, which is a very interesting and kind of very good approach, and kind of highlights the way or the plan we want to pursue is to increase the sharing of KYC information so that not each industry player has to kind of collect their own set. And especially in the absence of centralized digital identity systems. Lastly, also the Malawi FIA, Financial Intelligence Authority, they issued guidance around remote onboarding in line with the FATF guidance, which was very, very positive to see. So in general, we're seeing a lot more guidance issued by regulators in the last couple of months. Where we do still see some gaps, and this was highlighted by Tom as well, is to help the industry implement on the guidance and really help them understand risks around the risk-based approach, for example. We also would like to see more information being issued to industry around the risks that arise, because otherwise the industry will, especially in the case of AML-CFT guidance and the risk-based approach, they will feel more comfortable with the rules-based approach to avoid sanctions. But as we know, as we heard, it may lead to over-compliance and the exclusion of those that are unnecessarily excluded and don't pose a big risk to the financial sector. So in order to facilitate the best possible regulatory responses, I think we're still learning in basically real time, but what does crystallize from the actions we've seen is that the collaboration, public-private partnership, and the knowledge transfer between regulators in roadmaps such as this one or the G20 roadmap is essential in creating coherent responses, because by definition, cross-border remittances at least involve two sets of regulations. So if you can get a more harmonized approach, I think the longer term effects will also benefit, or we can aid in removing some of the longer standing barriers that we've been trying to work on for a number of years. Thank you.
Thank you, Antonio. And as you were responding to my question, I realized your response is almost covering most of the building blocks of the cross-border payments roadmap. And I would request Thomas, building on this train of thought, to talk about what's happening on that topic and what do we expect as the outputs in the near future. And then I'll also pass on to the other panelists to share their perspectives. So Thomas Lammer, over to you. And to the participants, please keep the questions coming. We will try and blend it in as part of the discussions.
Thank you very much. I have 3 or 4 slides kind of supporting the intervention on the roadmap. I'll ask the eGFRID team to put them on the screen. So as most of you are aware, the G20 has made enhancing cross-border payments a priority during last year's Saudi Arabian presidency. And they have asked the Financial Stability Board to coordinate the development of a roadmap to tackle this problem. As such, just checking, I cannot see whether the slides are already shown on the screen. Here we go. So we can go to the second slide immediately. We all, of course, know, especially with this audience, that cross-border payments are typically perceived as being slower, less transparent, more costly, and also not as easy as accessible as domestic payments. So before the onset of the pandemic, the G20 presidency has put cross-border payments on the agenda as one of its top priority, and set mandated the FSB in cooperation with the CPMI, FATF, BCBS, and international organizations like the World Bank and IMF to kind of address and come up with a roadmap to address this problem. So over the past year, we've worked very intensively, and people on this call have been involved, like Harish and Tom, on this roadmap, and it was a three-stage process. The first stage was a more analytical part, which kind of reconfirmed some of the aspects I just mentioned and some of the drawbacks we are still observing, despite all the developments we've seen in fintech and other areas. We are still observing in cross-border payments, and we try to go one level deeper in this assessment and see what are the kind of most prevalent reasons for the high costs, the low speed, the limited access, and the limited transparency. And we came up with 7 frictions, which were then published in April last year in an FSB report, which are along closely linked to the findings also in the blueprint itself. So it's about the fragmented and truncated data formats, complex processing of compliance checks, limited operating hours, also legacy technology platforms, long transaction chains, high funding costs for those that are providing the services, and also weak competition or the market structure itself as being a problem. And based on this, the identification of these frictions, we can then move to the next slide. The CPMI came up with a set of 19 building blocks that are aimed to address these frictions. So we, in this context, really kind of took a holistic approach, trying to address this problem in a comprehensive way. So we have seen in previous efforts that we have targeted specific segments of the cross-border payments market, namely, for example, remittances, or that we have kind of tried to address some of the underlying problems, like, for example, the de-risking or declining correspondent banking relationships. But we deliberately decided to, and also based on the mandate of the G20 presidency, to look at it comprehensively, to look at wholesale payments, so payments within among financial institutions, as well as the retail payment segment, so payments by consumers, businesses, and government agency across borders, and to really come up with the building blocks that are aimed to address these frictions. We grouped them into 5 focus areas. One is public and private sector commitment, and here we have a common cross-border payment vision and targets, which of course will also take into consideration previously set targets, like, for example, the cost for remittances, to implement international guidance and principles, and also define common features of cross-border payment service level. So to that extent, this links nicely, I'd say, to, for example, general principle 1 on transparency and consumer protection of the blueprint as such, and also partly to general principle 3 when we're talking about the legal and regulatory environment, which is also addressed in our second focus area, where we talk about the regulatory, supervisory, and oversight framework. And I'm sure Tom will then say a few words about this, because it's, of course, a lot of these topics that are therein are also related to FATF and its standards. Focus area C is about existing payment infrastructures and arrangements. And again, a close link to, for example, general principle 2 of the blueprint that talks about payment system infrastructure, and also to some extent, let's say, the general principle 4, market structure and competition. So here we all are aware, and we have talked a lot now about fintech and innovation, but a lot can be achieved by improving existing payment infrastructures. And this goes to the wholesale element, like, for example, increased adoption of BBP, but also then improve direct access to payment systems, and a topic that is also of high relevance for remittance service providers, for example, and other aspects like, for example, interlinking, as you referred to, and also align operating hours. Data and market practices is focus area D, and here we are referring mainly to ISO 20022 to be used for message formats, APIs, so application programming interface protocols for the data exchange, and this can of course also include eKYC data, and unique identifiers for proxy registry is also a clear link to customer identification. Last but not least, none of these reports, of course, can not look at stable coins and CBDCs. And one of the previous questions was, what is our guess when it comes to CBDCs and also their use for cross-border payments? The report itself structures these as a more exploratory building blocks, bearing in mind that we have not seen a broad-scale adoption or a rollout of CBDCs yet. And it's not our task to decide for a single jurisdiction or give advice to a single jurisdiction whether or not to issue CBDC. The aspect here, for example, is to look into the topic and make sure that if certain jurisdictions were to decide to issue central bank or retail CBDC, to take into consideration the international dimension as well. So we are kind of starting from a clean slate in this field. And of course, if we can already build in or factor in possible cross-border implication, it might kind of address a lot of the problems we otherwise might face down the road. We go to the next slide. You can see that we have a busy agenda ahead of us this year and the years beyond. So if you look at the roadmap, you will see that all of the institutions involved will be busy. For us as CPMI, will be one of the biggest programs we'll have, obviously, in the years to come. And the work has already started. So the first deliverable was already achieved in December, but there is more to be done in 2021, and timelines will be further refined each year when we are reporting back, while the FSB is reporting back to the G20. Just last but not least, on the next slide, this is of course not an effort by the CPMI or the FSB on its own. So we are counting, although we are leading many of these building blocks, we are counting on the support both of the public and private sector and fellow standard setting bodies. So some of the building blocks are led by IMF, World Bank, FATF, and also co-led by the BCPS Innovation Hub. But down the road, there will also be a strong involvement and outreach to the private sector in order to make this happen. I'll stop short here and happy to answer any questions.
Thank you. Let me now pass it to Thomas Nayland. Thomas, if you can cover the FATF specific aspects here. And then also, if you want to address a question which had come through in the chat on when we typically talk about de-risking, we talk about correspondent banking and things like that, but there is also de-risking of potential empty money transfer operators in a given country, in the domestic context as well, and also in the regional context. So if you can cover that as well as part of your response.
Thank you, of course. The G20 roadmap's a real achievement. It's very multidisciplinary. It brings a lot of perspectives together and a lot of countries and organizations. So it's a real achievement. FATF, as the last slide shows, is responsible for just one of these 19 building blocks, but we're contributing to a few others. And I'll focus on that one because it's an example of how the roadmap goes deeper. We don't have 19 deliverables. So on building block 5, the FATFs, which focuses on addressing points where the AML-CFT rules and their implementation causes friction for cross-border payments and considering how to address them, we're actually working on 4 different areas. We're looking at the global standards, the FATF's evaluations of them, at supervision and at technology. And there's a lot of work going on all of those areas. So the action plan, the roadmap as a whole, I think the actions to be taken are probably in the hundreds rather than just 19. On our side, we're first of all looking at where the standards are causing unnecessary friction. People have mentioned where, for example, the rules are different on the send and the receive side. That can mean that people have to comply with both, or sometimes even has incompatible requirements. So we have a survey open at the moment, launched in December, which is asking the private sector to give us feedback on where those challenges are. Where are there frictions and incompatibilities in the rules that could be harmonized to make a smoother path for cross-border payments? And the second phase of the project will be to take all of those results and all of that feedback and consider where we can harmonize, for example, specifying standards in more detail through guidance or even through changes to laws and regulations. And also where we can clarify some of the misunderstandings that are out there that are causing people unnecessary friction. There's no presumption that we're going to change anything, but we are going to look very seriously at where the rules can be made smoother. The second area, we have a strategic review going on of our own mutual evaluation process. Among other things, we're looking at doing country evaluations much more frequently than we do now. And then the last two areas are technology and supervision. And a lot of work is going on around how they interact with each other as well, like I mentioned before. On de-risking, one of the big reasons for de-risking, and it isn't an AML-CFT phenomenon, it's, as far as I understand, primarily a commercial phenomenon, but AML-CFT contributes to it. And the reason it contributes to it is a lack of confidence in the effective supervision of the remittances sector. Strengthening supervision of the sector as a whole and re-establishing confidence that it's actively and adequately protected will help ensure that individual remitters aren't being excluded from the financial system. And currently they are being excluded not based on their own AML-CFT controls, but on a lack of confidence in the supervisory environment in which they're working. So it's a problem that they often can't deal with themselves. Now, in relation to the question in the chat, we need to establish both sound supervision on the send side and, almost more importantly, sound supervision on the receive side, because the lack of confidence is often not around the sending office, but it's on whether money, when it's received, is going to be going to the person who it's intended for, or is going to be misappropriated by a criminal or a terrorist group. So there's a real need to strengthen supervision and also to provide assistance and advice, particularly to developing countries that are still establishing sound supervisory frameworks. That's not limited to remittances. Lots of supervisors globally in lots of different sectors are struggling to implement sound risk-based supervision. And it's difficult to have a comprehensive and dynamic understanding of the risks that they face. And even when they do understand the risks, it's even more difficult to apply a risk-sensitive supervisory approach. So we've been working for a few months on guidance on risk-based supervision, and that's actually due to be published next month. It's going to focus on both of those points. How can supervisors have a dynamic understanding of the risks that they're overseeing, and how to transition their approach to a risk-sensitive supervisory plan? And among other things, that's taking account of how they can make more use of off-site monitoring tools, which has of course been driven by COVID and the need to avoid physical visits to the institutions they supervise. So on supervision, it's very important. It's one of the fundamental factors underlying de-risking, and it's something where, if you look at the FATF's website in just over a month, you should see a new piece of guidance, which we hope will help address that. And the last area is technology. Financial innovation is one of the success stories of recent years, and we're seeing in the larger and more developed financial institutions a real acceleration in how they roll out new technologies, including machine learning and AI tools to support their anti-money laundering programs, smarter screening, and real-time risk assessments. The German FATF presidency, which started in July, wants to accelerate that trend and facilitate the use of these technologies, because they offer the prospect of much more efficient back office processes, but also an easier customer experience, which will help inclusion. So we're looking at the potential for technology to strengthen AML-CFT effectiveness. Things like eKYC, collaborative customer due diligence, and the issue that I talked about before about ensuring supervisors are confident and understand these technologies and that they can adequately supervise them. We're also looking at data pooling and analysis, how you can share data more easily across borders and between institutions without undermining privacy and while upholding high standards of data protection. So that's something where we're going to be coming out with some new guidance, I hope, this summer. And of course, the other question that's been raised is about central bank digital currencies, stable coins, and that's a watching brief. We're still working on that, but there was a report to the G20 in October last year on stable coins. And the important feature of that is a functional approach. It doesn't matter whether the stablecoin issuer is classified as a bank or as some other type of entity. What matters is that they're functionally able to perform adequate controls and manage the risks adequately, whoever they are.
Thank you. Thank you, Thomas. In the interest of time, I think I will summarize the discussions now and hand it over to Pedro. I think we covered a number of topics, but maybe let's highlight a few critical themes which are emerging, which perhaps we could delve further into as part of the next few sessions under this forum, and then also as part of the other discussions we have been having. The first one, I think, is the importance of eKYC has come out several times. There's been discussions around the new guidance which has come out, or rather reiteration of the guidance, long-standing guidance from FATF. More clarity on how to use digital has already come out. So now it is a question of giving adequate confidence to the regulators to be able to adapt the guidance to their local context. Many have already done. Many are in the process, but I think we need to try and see how fast we can move. And I think some focused discussion on that topic might be useful. The second area is there's been a good shift towards digital. That's what at least we can see in terms of service availability. And also anecdotally, many customers have been able to make the shift. But there is a concern that there might be some who might be left behind, the digital divide opening up. And there's also concerns around how much of the shift has been because of the reduction in fees, and is that sustainable over the longer term? And I think this raises a number of policy issues, I think, which regulators need to discuss. And I think this is an area where we need to collectively, as a group, perhaps try and synthesize and collate more information and present to the participants. The third area which is coming up is related area on the importance of supervision of the remittances market. There are new business models coming in, new innovations which are being introduced. There are new risks which are emerging in terms of new, or rather existing risks which are becoming more prominent, like cyber risk and operational risk, etc. And what are the implications of that for the supervision of the sector? And what can regulators do in an effective manner, be more efficient? I think is an area which perhaps is also worth discussing. I think I try to group them into these three themes, and I think, of course, if you drill down, there are many more. So I think these would be three priority areas for us to collectively deliberate on. There were some questions which I could not address as part of the panel discussion, and I would request the FAT team to perhaps put it together and send it to the panelists, and we will respond to that by email to the participants. With this, Pedro, let me pass it to you. I hope I have gave you enough time to properly wrap up. Thank you.
Yes, no, thank you so much. This has been fantastic, so interesting, and the list is long. It's actually very good that we had this session as the third after the first two, because I can corroborate the fact that in the previous ones, a lot of these issues were highlighted, notably on the private sector on de-risking. It's the hot potato. Tom, you did say, since the G20 discovered this in 2014, I would love to say a lot has happened. A lot has happened is true, but very little has moved in some respects because of what you've mentioned is in some way the hands are tied because this is a commercial response. And it's very difficult to just pull a rule saying you cannot de-risk. But there's some questions actually that we saw, and particularly for the market in Africa, to contextualize this, is there something that regulators on the receiving side could do? I think you did address, you pointed to that, the role that the receiving side could do. And thinking out loud, and some of the suggestions that were saying, is there anything in that regard that they can do? Some sort of certification, appease the minds, and some sort of a dual side certification that commercial institutions can be appeased in some way. Because again, it's a phenomenon. It's not just a strict rule, and therefore maybe the tool to address this should be different than just regulation. So this is one of key aspects. And I believe a key point maybe for the next sessions that actually wanted to look into Africa. So that's one. I think also in the next, as it was also called upon on the previous one, is to look also examples of CDD from the private sector response. What can be done? How can we help the private sector on customer due diligence to effectively integrate this in their business model, as now the market has changed? And I think support from regulators in towards that change could be very very timely actually. So otherwise, I think this has been fantastic, and what we will ask is, of course, to have more questions coming in, and we will introduce all this in the website. We're doing a report on all the first session that was held this week. And we also opened the debate online to have further questions come in, and we will ask our participants to kindly link that. To participants, I also want to say that there's a lot of information that was shared from the panelists here. Further information and links will be provided online. And also to suggest the priority topics. We're going to run a little survey to try to see which hot topic, let's say, we should address first from the long list, actually, that I think Adish presented just a few minutes ago. With this, it is 5 o'clock, but I don't know if Adish, if there's another point or the panelists that would like to bring forward. If not,
I think
yes, Adish, please.
I think we can conclude here. Oh. We had a good discussion. We have summarized most of the points. I think it's a good place to conclude. Thank you.
And I would like to convey the message that there's going to be a conference CPMI on March 18-19. So I want to make sure we're going to put this in the website and on the not only on the panelists but participants. If there's information related to this to share, please do it. The idea here is that we're continuing it. And my last word just be on the upcoming month. The idea is to populate on the best practices that we're seeing around the world on all the issues that these measures bring forward. This is the implementation part of this dialogue, and of course we all need to contribute to that in order to exert the change that we're looking for. So without further ado, I wanted to thank everybody really for taking the time, for joining us. All this information will be on the website. The discussion will continue. We will prioritize in the coming 2 weeks and set the agenda. I can already mention that the next session of this track will be getting a closer look at the African market, specifically European Africa, and try to address some of the issues that Adish already pointed out. Not all of them, that will be in subsequent sessions, but we will try to bring it in that way. So I really would like to thank everyone for participating today. This session has been recorded, so we will post as well extracts and quotes. Some of the quotes that some of the speakers have mentioned have already been tweeted. I just wanted to let you know. And we will share with you further information as we go. So thank you so much for joining us today, and a continuation of a very good day for those that are the participants in the line. Thank you.
Thank you.
Thank you. Goodbye.
Thank you. Bye-bye, everyone.
Bye.